Welcome everyone to a demonstration of the below market lease calculator. This will be used by not-for-profits who have below market or, for instance, peppercorn leases. They will also need to use the at market lease calculator for any leases that are at commercial terms. So as always, you should start by reading the user guide and listening to this video. But from there, you move on and look at the time series. So the transitional year for a typical June year end will be 30 June 2020. You would use the below market lease transitional model to transition the leases for 30 June 2020. And then you would use this model for 30 June 2021, so the year after your transition. One of the critical things is to set the correct historical month. So the historical month should be in the year before the year you're currently doing. So I've set that to June 2020. You then need to check for the imported lease assumptions. Now this is currently set as a formula to go back to your lease transitional model. You can manually input these, so you can either double check the formulas or you can manually input them, but they link back to this model and they go to the Consolidated Leases tab. And if you open up the boxes on the left-hand side, you can see that it'll go through and it shows lease by lease the items that then need to be imported into this tab. So you go down there and it follows whatever your choices are. So if I go back to the transitional model, option 1 was selected, and therefore these journal entries come through on the 1st of July 2018. If I was to select option 2, the journals would all come through in this section, and I'll demonstrate that. So if I change that to option 2, if that was my transitional choices, then because this is currently set up for formulas, you see that all the journals move across to 1 July 2019. So that drives whatever your transitional choices were and enables this model to then calculate depreciation, amortization, interest expense, etc. going forward. There will be no historical lease assumptions in the first year after transition because you've imported all those, but in years going forward, 2022, 2023, columns will open up and you can put in historical arrangements. You then put in the pre-transitional leases that you transitioned. So once again, if I go back to the transition model, there was one lease we transitioned. You put all that information in, the start date, the term, etc. With one slight variation, these two cells you need to update to commence at the start of the financial year 2021. So we're transitioning, or we're using this calculator for June 2021, which means these payments need to be the first payment in that financial year. So what was the first monthly payment for July 2020? So you'll see that those two payments do not actually equal what were there because they were payments for 2019. You need to go to the Calculations tab and look here for July 2020. And you can see the payments were $811 and the imputed market payments were $14,061. They're the numbers that come into there to then drive the model going forward. You then put any post-transitional leases in. We've added one in here. Started on the 1st of September 2020, 60-month term with a 60-month option period. Once again, you only include option periods if you're reasonably certain of exercising them. If you're not reasonably certain, put 0. You don't put all option periods. You only put the option periods that you're reasonably certain. So fill those details in. The next tab that I advise you go to is to this FS Journals tab. Now this is 30 June 2021 that we're in. So all the journals that are going to be relevant are here. Now the first 10 leases on this tab have been set up as the transitional leases. So this is the lease that you've brought through, and this is the journal entries for this year. Shows your depreciation, lease liability, bank, interest expense, etc. So we'll put those in. The next leases are blank at the moment because we've only got one transitional lease in. If you want to see the post-transitional leases, they commence down here at about row 286. So this post-transitional lease, lease number 3, starts here, and you can see it only commences in 2021. So the journal entries will create a right of use asset, will create a lease liability, and there's a significant income amount, which is a requirement under 1058, AASB 1058, that you value the right of use asset effectively at market terms. The lease liability is based on your cash flows, and the difference is basically your interest expense. You can then go to the Consolidated FS Journals tab, and once again, look in 2021. There are your journal entries for all the leases that are input that go through there. So hopefully that assists you in using the below market lease calculator. Obviously, there is some judgment that needs to be undertaken. The market reduced rent is what is actually being paid. The imputed market rent is what you would pay in an arm's length transaction. That might be quite difficult to find. And also the incremental borrowing rate for some organisations. They may need some assistance in looking at similar organisations or some corporate finance advice. All the best with using the model.